As we near the end of 2023, employers are having to make difficult decisions to cut jobs as they grapple with uncertain macro pressures. In December alone, companies like Spotify, Hasbro, Etsy, and Twilio all announced reductions to headcount. What is the signal for the labor market in 2024? Daniel Zhao, who is the Glassdoor senior economist, joins us now. Daniel, always a pleasure to get some of your insights. I wish it was on better occasion, but the reality right now of how this factors into the broader labor situation, what's your read through on it?
Well, we are seeing that the job market is slowing down as we head towards the soft landing. And in some cases, that has meant slower hiring, but in other cases, that has meant layoffs. So we have seen a little bit of a mini wave of layoffs as we approach the end of the year. It's not quite the same as what we saw last year, but clearly we are seeing a little bit of labor market cooling.
So Daniel, looking ahead to 2024, do you think we'll see more of a continuation of this, or will we see some of these companies that had been laying off workers or have been sitting on the sidelines, hiring freezes, begin to lift and start hiring again?
Well, I do think that as we head into 2024, we are going to see a little bit of a reversal in the sense that as we entered this year, really the theme was that everybody thought there was a recession on the horizon, right? And so as we head into 2024, I think there's a little bit more cautious optimism about the likelihood of a soft landing. And so hopefully we will see employers start to open up hiring again, especially as we get into the new year and new budgets are set and that sort of thing. I think November, December is always a tough time for hiring. It's always a little bit tough for folks trying to find a job because of how slow things get.
What is your anticipation for the hot sectors where there will be perhaps a wave of hiring in the new year and the types of roles as well?
Mm-hmm. Well, for 2023, I think one thing that really jumped out to us in the data is the industries that are really hiring are healthcare, education, and government. And I do expect that in 2024, we're going to continue to see that. I mean, just for healthcare alone, that's an industry that we expect to continue to have more demand for workers, especially as the American population ages and the demand for healthcare services increases. And one thing I'd like to call out here is that people often think about industries as pretty separate, but every industry needs, for example, like IT workers or administrative assistants. And so there are a lot of skills that are very transferable between industries for people to look for, where those jobs are that fit their skills.
Daniel, you have a great sense just of the jobs that are available, what some of these employers are offering here there at Glassdoor. What are you seeing the activity like on your platform? And when it comes to some of those benefits and perks that companies had to offer employees because the job market had been so tight over the last couple of years, is that still the case heading into the new year?
Well, I think we're getting a bit of a mixed bag here. One thing that we are expecting to see in 2024 is as the labor market cools, especially from the very hot job market that we've had in the last few years, we do think that employers are going to pull back on benefits because, while workers really hate to have their pay cut, like they hate seeing their salary or their wages go down in their paycheck, they often have a less clear sense of how much their benefits are worth. And so you might see employers start to pull back on benefits, especially some of the perks that were really popular in the late 2010s, like free lunch in the office or like ping pong tables, that sort of thing. I think that those kinds of benefits are going to get pulled back as employers try to manage costs.
It's okay. The Papa Shot that we have here is better anyway, Daniel. I've been enjoying that, quite frankly. But at the end of the day, I mean, one of the huge things that we think about in correlation with the overall compensation package is just what we heard from the Fed yesterday, and is specifically on wages. Wages still running a bit above what would be consistent with 2% inflation over a long period of time. How does this have a broader, perhaps, economic pass-through on the wage front?
Well, I think we're very close to where the Fed wants to see wages. And in fact, when you look at some of these other labor market indicators, like the quits rate, I think is a great example. You're seeing that we're pretty much back at where we were before the pandemic. And granted, the pre-pandemic labor market was a pretty hot labor market by historical standards, obviously not as hot as what we saw in 2021, 2022. But I think we are very close to a labor market that, as the Fed would say, is in balance. So I think there's a strong possibility that in 2024 we're going to be able to attain that soft landing, at least from the labor market side of the equation, right? The labor market is doing its job to get us toward the soft landing. Really, it's up to inflation now to do its part.
To what extent do you believe reskilling will be one of the most perhaps prominent thoughts among the workforce right now, Daniel?
Mm-hmm. I guess I think there are a few ways to look at this. One is I think there are a lot of skills that are transferable. I think a lot of people underestimate how useful especially their soft skills like communication and customer service might be applicable in different industries and even different occupations. But beyond that, we know that there is a lot of disruption going on in the workplace nowadays, right? We talk about AI all the time, and I think there's potential for a lot of disruption that comes with that technology, and it's very difficult to predict exactly what skills will be important or what jobs will be affected when you have this kind of paradigm shift.
Daniel Zhao, always great to get your insight here. Thanks so much for joining us here this morning. Glassdoor's senior economist.